Welcome back, everyone. I hope you're all having a fantastic day, so you never miss the latest Cardano, Bitcoin, and crypto market updates. Today we're going to break down everything happening with ADA, why the price has suddenly weakened again, what the increase in short positions could mean for the market, how Bitcoin is approaching a critical breakout zone, and why some important developments behind the scenes are still giving long-term Cardano holders reasons to stay optimistic. There is a lot to cover, so let's jump right into today's update. This video is for educational and informational purposes only and should not be considered financial or investment advice. Always do your own research before making any investment decisions, as cryptocurrency markets are highly volatile and involve significant risk. Unfortunately, today's trading session has pushed Cardano to its lowest price level since July 3rd, wiping away another portion of the recovery that ADA had managed to build over the past several days. While the decline may not seem dramatic at first glance, it continues the pattern of weakness that has slowly returned across the broader cryptocurrency market. What's especially interesting is that this move comes after a relatively quiet period. The market looked calm on the surface, but behind the scenes, something much bigger has started developing once again. Over the weekend, we have seen a noticeable increase in short positions opening across the crypto market. This growing bearish activity suggests that traders are preparing for increased volatility as the new trading week begins. The real question now isn't whether volatility is coming, but rather which direction the market will ultimately choose once this period of compression finally breaks. Besides the recent price action, there was another development from June involving Cardano that deserves attention because it highlights growing institutional confidence in the ecosystem. We'll discuss that shortly, but first let's focus on what the charts are telling us. Yesterday actually started on a positive note. The market opened with encouraging green candles, and for several hours it appeared that buyers were beginning to regain control. Bitcoin experienced a sudden pullback during the session, but it recovered fairly quickly, allowing many altcoins, including Cardano, to remain relatively stable. However, by the end of the day, the market produced a rather unusual candle for ADA. If the closing price had been just slightly higher, the candle would have resembled a classic shooting star pattern, which often signals a possible bearish reversal after an upward move. Although the pattern wasn't technically perfect, it still reflected hesitation from buyers and hinted that downside pressure was beginning to return. Today's candle confirmed that weakness by pushing ADA down toward approximately 16.23 cents, bringing price back to an extremely important technical level. That move represented another successful retest of the 20-day moving average, one of the most closely watched support levels by technical traders. This moving average now becomes critical because Cardano needs to maintain support above it if buyers want to preserve the current structure. Losing this level could encourage additional selling pressure, while holding it would reinforce confidence that the recent correction is simply a healthy pullback within a broader recovery. At the same time, Bitcoin remains in an interesting position of its own. Despite the recent hesitation, Bitcoin is still trading comfortably above its longer-term trend indicators, including the 200-week moving average, which continues acting as one of the strongest long-term support levels in the market. Overall, Bitcoin still appears technically healthy, but it is rapidly approaching a point where a decisive move becomes necessary. The market has been compressing for several sessions, and periods like this rarely last forever. Eventually, price breaks in one direction, and that breakout usually creates momentum across the entire crypto market. One of the biggest reasons behind yesterday's sudden volatility involved broader geopolitical uncertainty. Events unfolding internationally created another wave of nervousness among investors, leading to leverage liquidations throughout the crypto market. Whenever uncertainty rises outside financial markets, leveraged traders often become the first victims because even relatively small price movements can trigger forced liquidations. That is exactly what happened as selling pressure accelerated during the latter part of the trading session. Looking specifically at Cardano, market data showed the ADA long-to-short ratio falling to roughly 0.92. In simple terms, that means short positions currently outnumber long positions by around 8%. While this isn't an extreme imbalance, it clearly demonstrates that bearish traders have become increasingly confident heading into the new week. More short positions also increase the possibility of a short squeeze if prices unexpectedly move higher, making the coming days especially important for traders watching leverage activity. Bitcoin's liquidation map also reveals several key levels that deserve close attention. Long liquidation zones begin to appear around the $63,500 area, while short liquidation clusters become much heavier above approximately $64,550. The most concentrated group of short positions appears close to the $64,800 level. These price zones matter because if Bitcoin begins breaking upward through them, liquidations could fuel additional buying pressure, creating a rapid move toward the next major resistance. Under that scenario, Bitcoin could potentially challenge the $68,000 region much sooner than many traders currently expect. On the other hand, if buyers fail to generate enough momentum and Bitcoin loses nearby support, the market could quickly revisit the $62,000 region. That level aligns closely with Bitcoin's 20-day moving average and represents another major technical support area. A successful defense would likely stabilize the market, while a breakdown below it could temporarily increase selling pressure across both Bitcoin and major altcoins like Cardano. For now, the market remains compressed between these critical support and resistance zones. As traders continue opening leveraged positions on both sides, the probability of a significant breakout continues increasing. That means the first few days of the upcoming week could easily determine the short-term direction for the entire cryptocurrency market. Even with all of this uncertainty surrounding price action, there are still several encouraging signals that long-term Cardano investors should not ignore. One of the strongest indicators continues to be trading activity and on-chain behavior. Over the past 24 hours, the cryptocurrency market has continued generating roughly $51 billion in trading volume, showing that participation remains healthy despite the recent pullback. High trading volume during periods of consolidation often suggests that investors are actively positioning themselves ahead of a larger move rather than simply abandoning the market altogether. While prices may be moving sideways or drifting lower, the amount of capital flowing through the market tells us that traders are still paying very close attention. Cardano itself has slipped slightly in the overall cryptocurrency rankings, moving down to the 15th position by market capitalization. Although some investors may view that negatively, the reality is that this change has much more to do with the broader crypto market than with Cardano specifically. Many digital assets have experienced similar fluctuations as traders rotate capital between different sectors. In many cases, investors are simply taking profits after recent rallies while waiting for fresh catalysts before committing new capital. This type of rotation is common during periods of uncertainty and does not necessarily reflect weakening confidence in the Cardano ecosystem. Despite the recent decline, Cardano is still on track to finish another solid week overall. Looking beyond the daily candles gives a much clearer perspective. Markets rarely move in a straight line, and temporary corrections are a normal part of every healthy trend. What matters more is whether long-term investors continue accumulating during periods of weakness, and recent blockchain data suggests that they are doing exactly that. One of the most encouraging developments this week has been the continued removal of ADA from centralized exchanges. Today's figures represent the largest amount of ADA withdrawn from exchanges since the 7th of the month. Historically, exchange outflows are often viewed as a bullish indicator because investors usually transfer their coins into private wallets or staking platforms when they intend to hold rather than sell. This reduces the amount of immediately available supply on exchanges and can strengthen long-term market conditions if demand eventually increases. At the moment, approximately $8.81 million worth of ADA has been removed from exchanges during the week. That is a significant figure and reflects growing confidence among holders who appear willing to accumulate during market dips instead of panic selling. This behavior has repeatedly appeared throughout previous crypto cycles, where experienced investors gradually increased their positions, while short-term traders focused on day-to-day price swings. Although exchange outflows never guarantee higher prices, they remain one of the healthier on-chain metrics investors monitor when evaluating long-term sentiment. Looking ahead, the upcoming week is expected to be far more eventful than the relatively quiet weekend we've experienced. Several important economic reports are scheduled for release, and these announcements could significantly influence both traditional financial markets and cryptocurrencies. Among the most closely watched reports are the Producer Price Index, commonly known as PPI, and the Consumer Price Index, or CPI. These inflation reports often have a direct impact on expectations surrounding interest rates, Federal Reserve policy, and overall investor confidence. Stronger than expected inflation data could increase market volatility, while softer numbers may provide additional support for risk assets such as Bitcoin and Cardano. Beyond macroeconomic events, there was another Cardano-related development that quietly attracted attention. During June, Kraken registered 12 Cardano stake pools containing approximately 1 billion ADA. This represents a substantial commitment to the Cardano network and highlights the continued growth of staking participation among major industry players. Staking remains one of Cardano's strongest features because it allows holders to earn rewards while simultaneously helping secure the blockchain. The addition of these stake pools demonstrates that large organizations continue recognizing value in participating within the Cardano ecosystem over the long term. Although there hasn't been a massive wave of Cardano-specific news today compared to the previous couple of days, that isn't necessarily a negative development. Markets often require periods of calm between major announcements, allowing investors time to digest new information before the next catalyst arrives. Sometimes quiet periods create the foundation for significant moves once fresh news enters the market. For now, most attention remains focused on Bitcoin's next breakout attempt, macroeconomic reports, and whether leverage continues building across the crypto market. As we move into the new week, traders should remain patient while carefully monitoring key support and resistance levels. Bitcoin continues sitting near an important decision point, and whichever direction it chooses will likely influence the broader altcoin market, including Cardano. If Bitcoin successfully breaks above resistance and forces large numbers of short liquidations, momentum could rapidly accelerate across the market. On the other hand, if support fails, we may experience another temporary correction before buyers return. For Cardano holders, the bigger picture remains centered on adoption, staking growth, exchange outflows, and continued ecosystem development. Short-term price swings will always generate headlines, but long-term investors generally pay closer attention to network fundamentals and accumulation trends. Those metrics continue providing reasons for cautious optimism despite the recent volatility in MEX. That wraps up today's complete Cardano market update. Thank you so much for watching and for supporting the channel. If you found this analysis helpful, make sure to hit the like button, subscribe to the channel, and turn on the notification bell so you never miss future updates covering Cardano, Bitcoin, and the entire cryptocurrency market. Share this video with anyone who follows crypto and let me know your thoughts in the comments below. Do you believe ADA will hold support and continue higher, or do you expect another pullback before the next major rally? I appreciate every one of you for watching, and I'll see you in the next video.